Property has long been a cornerstone of investment portfolios, attracting both seasoned investors and aspiring homeowners. The tangible nature of bricks and mortar offers a sense of security and stability, while the potential for capital appreciation and rental income provides attractive financial prospects. In an uncertain world, property investment can feel like a safe haven, a tangible asset that can weather economic storms. For many, the dream of owning a portfolio of properties, generating passive income and securing their financial future is a powerful motivator. The UK property market, with its diverse range of properties and investment opportunities, continues to hold a lure for those seeking to grow their wealth. However, navigating the complexities of property investment requires careful consideration and a thorough understanding of the available options. One such option, investing through a limited company, has gained significant traction in recent years, particularly among landlords with larger portfolios. Investing in property through a limited company offers distinct advantages, primarily in the realm of taxation. This approach is becoming increasingly popular among savvy investors who are looking to maximize their returns while minimizing their tax liabilities. By structuring your investments in this manner, you create a separate legal entity, effectively separating your personal finances from your property business. This separation is crucial as it not only helps in managing finances more efficiently, but also provides a clear distinction between personal and business assets. This separation brings several key benefits. Firstly, limited companies are subject to corporation tax on their profits, which is currently lower than the income tax rates for higher earners. This means that the profits generated from your property investments are taxed at a lower rate, allowing you to retain more of your earnings. This can result in significant tax savings, particularly for those in higher income tax brackets. For instance, if you are a higher rate taxpayer, the difference in tax rates can lead to substantial savings over time, making your investment more profitable. Additionally, profits from property sales within a limited company are also subject to corporation tax, potentially reducing your overall tax liability. This is especially beneficial when you consider the long-term gains from property investments, as the lower tax rate can significantly enhance your net returns. Secondly, limited companies offer greater flexibility in terms of how profits are extracted. This flexibility is a key advantage for investors who want to tailor their income to their specific financial needs and goals. You can choose to take a salary, dividends, or a combination of both, allowing you to optimize your tax efficiency. By carefully planning your profit extraction strategy, you can minimize your tax burden and maximize your take-home pay. This flexibility can be particularly beneficial for those seeking to manage their income and tax liabilities effectively. For example, by balancing salary and dividends, you can take advantage of lower tax rates on dividends and reduce your overall tax bill. Moreover, investing through a limited company can provide enhanced asset protection. This is a critical consideration for investors who want to safeguard their investments from potential risks and liability. As a separate legal entity, the company's assets, including the property, are shielded from personal liabilities. This means that your personal assets are protected in the event of business-related legal issues, providing an additional layer of security. This means that in the event of legal action against you personally, your property investments held within the company are generally protected. This legal protection can be invaluable, ensuring that your investments remain secure and continue to generate returns even in challenging circumstances. In conclusion, investing in property through a limited company offers numerous benefits, from tax savings to enhanced asset protection. By carefully planning your investment strategy and leveraging the advantages of a limited company structure, you can build a robust and profitable property portfolio that stands the test of time. Consulting with a financial advisor can help you navigate the complexities of property investment and ensure that you are making the most of the opportunities available. With the right guidance and a strategic approach, you can achieve your financial goals and secure your future through smart property investments. While the tax advantages and legal protections offered by limited companies are enticing, it is crucial to acknowledge the associated costs and administrative burdens. These factors can significantly impact the overall feasibility and attractiveness of operating as a limited company. Setting up and running a limited company requires adherence to specific legal and regulatory requirements, which can entail additional expenses and paperwork. This process begins with the initial incorporation, which involves several steps and associated costs. Firstly, there are costs associated with incorporating a limited company, including registration fees and legal expenses. These fees can vary depending on the complexity of your business structure and the professional services you engage. Additionally, you will be required to file annual accounts and tax returns with Companies House and HMRC, respectively. This is a mandatory requirement to ensure transparency and compliance with the law. These filings necessitate a certain level of accounting knowledge or the need to engage the services of an accountant, incurring further costs. Professional accountants can help ensure accuracy and compliance, but their services come at a price. Secondly, managing a limited company involves ongoing administrative responsibilities, such as maintaining accurate financial records, complying with company law requirements, and filing annual confirmation statements. These tasks are not just one-time activities, but require continuous attention throughout the year. These tasks can be time-consuming and require a degree of diligence to ensure compliance. Failure to meet these obligations can result in penalties and legal issues, which can further strain your resources. Furthermore, it is essential to consider the potential for increased mortgage costs. When a limited company seeks financing, lenders often scrutinize the application more rigorously. Lenders often perceive lending to limited companies as riskier than to individuals, resulting in higher interest rates and stricter lending criteria. This perception of increased risk can make it more challenging to secure favorable loan terms. This can impact the overall profitability of your property investments. Higher interest rates mean higher monthly payments, which can reduce your net income from rental properties or other investments. Therefore, it is crucial to weigh these financial implications carefully before deciding to operate as a limited company. In conclusion, while the benefits of forming a limited company are substantial, the associated costs and administrative responsibilities are significant. Proper planning and professional advice can help mitigate these challenges, ensuring that the advantages outweigh the drawbacks. The decision of whether to invest in UK property as an individual or through a limited company hinges on your specific circumstances, investment goals, and risk tolerance. This decision is not one to be taken lightly, as it can have significant implications for your financial future and the management of your investments. There is no one-size-fits-all answer, and careful consideration of the pros and cons of each approach is paramount. Each method has its own set of advantages and disadvantages that must be weighed carefully. Investing as an individual offers simplicity and lower initial setup costs. This can be particularly appealing for those who are new to property investment or who prefer a more straightforward approach. The administrative burden is significantly less onerous, and you're not subject to the same level of regulatory scrutiny as a limited company. This means less paperwork and fewer bureaucratic hurdles to jump through. However, you will be taxed on rental income and capital gains at your individual income tax rate, which can be quite high depending on your overall income. This rate may be higher than the corporation tax rate, potentially reducing your overall profitability. On the other hand, investing through a limited company provides tax advantages, asset protection, and greater flexibility in profit extraction. This can be particularly beneficial for those with larger portfolios or more complex investment strategies. The ability to extract profits in a more tax-efficient manner can lead to significant savings over time. However, this comes at the cost of increased administrative responsibilities. Running a limited company involves more paperwork, regulatory compliance, and potentially higher costs for professional services such as accounting and legal advice. There is also the potential for higher mortgage costs, as lenders may view limited companies as higher risk compared to individual borrowers. Additionally, there is a need for greater financial transparency, which means more detailed record-keeping and regular financial reporting. Ultimately, the optimal approach depends on your individual circumstances. What works for one investor may not be suitable for another. Factors to consider include your income level, which can affect your tax liabilities, and the overall profitability of your investments. The size of your property portfolio is also crucial, as larger portfolios may benefit more from the tax efficiencies offered by a limited company structure. Your investment goals and your appetite for administrative tasks are equally important. If you prefer a hands-off approach, the additional responsibilities of running a limited company may not be appealing. Seek professional advice from a qualified accountant or financial advisor. They can provide personalized guidance based on your specific situation and help you navigate the complexities of property investment. They can also help you determine the most tax-efficient and advantageous structure for your specific situation, ensuring that you make the most of your investment opportunities while minimizing potential risks and liabilities.